I mean, we were speaking about Nigeria briefly, where I see that you've been able to get quite a bit of money out. I mean, are you confident that everything that's left in there will come back to the company's headquarters in Bryanston soon?
Absolutely. No, the market in Nigeria, the foreign currency market, is now fully liquid. We have been able to extract about $78 million. And we're confident that there are no further constraints or restrictions on extracting further cash. The Nigerian market is a very good market for us. It's growing again after 5 consecutive quarters of recession. We have seen double-digit volume growth on the beverage can side. And we remain very optimistic that in the long run, we will make even more handsome profits from this particular country.
I see you're not as optimistic about Angola and your ability to get some monies out there. Quite big losses recorded in this period. So take us through the what shareholders can expect from Angola and your ability to repatriate there.
The Angolan situation is still quite tight. We were only able to extract $21 million during the last 6 months that we're reporting on. Which is far less than we made available. So what we've done is to restrict further buildup of cash balances in country. Of course, it's a highly profitable business, and we are performing very well from a sales perspective. So there are still profits that are being generated in country, which we have difficulty in repatriating to South Africa. But we believe that this is a long game that we need to play. We believe that the increase in the oil price from the lows that we saw about 18 months ago of $27 a barrel to a situation where we today sit at $67, $68 a barrel will contribute significantly to the unlocking of liquidity in Angola. So for the moment, we're sticking it out. We believe that this is strategically the right move to do, and we remain committed to that country.
And just a quick one, in total, how much cash do you have stuck in countries like Nigeria, Angola, and Zimbabwe?
We've got about 2.2 billion rand in Angola and a further 838 million rand in Zimbabwe. The balances in Nigeria are not classified as restricted because we can take out all the cash we want whenever we want.
And as we wrap, Zimbabwe today announcing that it will hold elections on July 30th. As an operator in Zimbabwe, have you seen any material changes that do inspire business confidence since the change in administration with the resignation of former President Robert Mugabe?
I think some of the adverse regulatory initiatives that had characterized the Zimbabwean environment have come to a halt. So the indigenization requirement has been dispensed with, and that has given us the comfort to make further investments in that country. We have certainly seen customer demand and consumer demand in that country remaining very strong, and we have benefited from that as we are able to continue to operate in that country, essentially requiring our major customers to make upfront payments for raw materials that enable us to convert those to products that they can then use to on-sell their products to their customers. So it remains a good market for us. We look forward to a continuing liberalization in the exchange rate regime. Obviously, it is necessary for further dollars to be injected in that country, but as we see tobacco exports picking up, the mineral sector picking up, again, the omens are good, and under a new administration, we think that we are going to see a more investor-friendly climate.